All right, welcome everybody to this week's VARC Solutions Bookkeeping Academy. Just as a reminder, our goal here is to help our team as well as other folks that are doing bookkeeping, QuickBooks work, sort of level up the basic foundation of what you know and what you need to know for doing basic bookkeeping, but also be able to position you to be able to do some of that more higher level consulting type of work. And so part of that is not just going in and coding and reconciling and that kind of stuff, but looking for things that need to be fixed, looking for things that clients need help with, looking for things that we can call attention to clients and basically say, did you know, have you noticed, here's something that we can help with. And so in particular, today, Angie's going to talk about reporting red flags, and that's a good thing that we always ought to be looking for. And I think it's really easy, obviously, to kind of um, get into the rut, so to speak, of just doing the books, right? And not looking around and not seeing what else is there. But I think this will be a really helpful topic, and it's a good reminder that we should be looking at that stuff anyway. So on our team, Angie Willis, she's one of our senior QuickBooks Pro Advisor consultants. So Angie, go ahead and take it away.
Thanks, Brad. Can everybody hear me okay?
Yes.
Good over here.
Yep.
Perfect. All right. Today, we are going to go over some reporting red flags in your profit and loss, otherwise sometimes known as the income statement and the balance sheet. I am going to start out in QBO, and getting to these reports is extremely easy. Over to the left, reports, standard report. Your profit and loss and balance sheet should be a favorite, but if not, you can always search for them below. One of the things I like to recommend when you start with, for example, a profit and loss, is to take a larger period of time, say this year, and then segment it into smaller amounts of time, such as 5 months. What that does is it allows you to see trends over time so that you can catch these red flags. Really quickly, I'm going to jump over to desktop as well. Want you to see how to get to these reports. Reports, company and financials, again, profit and loss and balance sheet. We're going to start with the profit and loss. And again, I'm going to shift to this year by month, just so you can see some trends. So overall, I've obviously seen this sample file before, but I'm reviewing this profit and loss for one reason or another. Maybe it's year end and this file is about to go to the CPA for taxes. Maybe I've just been working on it for several months and I just want to make sure I haven't made any gross errors. Or maybe this is a new client and I need to see how they do things, maybe some things they've made errors on in the past. So for whatever reason, I'm looking at this profit and loss, and some of the very easy overarching, just red flags to look at. When you're looking at a QuickBooks profit and loss or a balance sheet, for the most part, their account balances are positive, right? Whether it's an income account, whether it's an expense account, they're all positive numbers. So one of the first red flags I may look for is negatives. That doesn't necessarily mean that they're wrong. But if I see a negative $2,000 in travel, is that a deposit that was miscoded? Or was it a return on travel? Not sure. That's why it's called a red flag. It's something to look at. One of the next things I might look at is out of character large amounts. For example, in this tools and equipment expense, it looks like their costs are quite low, $230, $390, but then there's a $24,000 amount. Could that be a fixed asset that's miscoded? Who knows? That's why it's called a red flag. Got to look it up. Some of the other things that I like to look for in this trending profit and loss is breaks in trends. So you'll notice in this particular account, it looks like every month they have insurance expense, but then in March, they're missing it. So is that expense miscoded? Is it gone? Like, did someone accidentally delete it? Whatever happened. So breaks in trends. And then one of the other things that feels very subjective, but still worth a look, is duplicated accounts. So some people have very, very specific chart of accounts, and you really need to have these conversations with your client. But if I look and I see a supplies account that has multiple numbers, and then I also see a supply account, typically that indicates, oops, someone created a duplicate account and accidentally put an amount in there. So just some things to look out for. Also, some of the general QuickBooks accounts. So for example, in Desktop, they had a default Ask My Accountant account. And then in QBO, they actually have 3 default accounts. They have uncategorized asset, income, and expense. If you see amounts in those, that typically is something that needs to be corrected, that needs to be recoded, or perhaps it's waiting for your review or CPA review, et cetera. So in essence, looking at trends, does it make sense? Do they appear reasonable? Are they being kept up with? Do I see monthly rent every month, whatever? All right, now let's talk about some of the account types. And what I'd like to do is I'm going to jump over to QBO because I want to show you how to do this in QBO, but I'm going to review in Desktop, frankly, because the Desktop is something you can alter and mess with, and the QBO test file changes every time you jump in. So if I'm looking at income accounts, and if the client is using traditional QuickBooks sales forms, meaning they create invoices, they receive payments, make deposits, etc., then in the income accounts, I should see a certain type of transaction. I should see invoices, credit memos, sales receipts, that kind of thing. So if I go to my income and I go to my total income, and if I select that total, it brings up the detail, but I'm lazy. I don't want to go through every one of these to see if something looks wrong. So QBO has an incredibly handy function which allows you to group by, and then you can group by transaction type, meaning everything in my income has now been sorted into different transaction types. It also has this handy dandy little roll up feature. So I can roll up invoices, I can roll them up and see everything. But invoices, sales receipts, credit memos, those all make sense to me. But these expenses, I might want to take a look at that and see what's going on. So again, QuickBooks Online, whether it is an income account, cost of goods sold, whatever, if you go to that total, bring up the detail, and then do the group by, you can do by transaction type. Now I'm going to jump back over to Desktop, show you how to do that. So again, I'm just going to look at income again. I go over to the total, double click on it to bring up my detail. It does not have that handy dandy group by in this particular form, but I can still sort by transaction type right here and scroll down and just see if there's something that looks wrong. It's just easier to see that way. When you're looking at cost of goods sold, if your client uses the inventory function in QuickBooks, you should see invoices, credit memos, etc. as your transaction type, because that's how QuickBooks moves inventory asset values to the P&L. So if I come over to this total cost of goods sold, open it up, sort by type, and I see bills, it makes me wonder, did they accidentally code something here instead of using items? So they're all subjective to what your client does and how they use QuickBooks and any third-party softwares. So if I'm in expenses, the things I'm going to look for are checks, bills, vendor credits, all those types. And you frankly just have to look through and see what's missing or what's there that shouldn't be. One of the other things that I might look for when it comes to transaction types is if my client utilizes QuickBooks Payroll and I go into, for example, let me scroll a little bit more. If if I scroll down and get into their wage accounts, I should see payroll checks. I should see, if it's a tax account, I should see payroll liability transaction types. But if I start seeing checks and expenses and journal entries, I may want to know what's going on. So it truly just depends on what your customer utilizes and what you're looking for. The last two account types in the profit and loss, the other expense and the other income, are used so differently for every different customer, different client, different files. So again, just keep in mind, do they make sense? Do they appear reasonable? And are they being kept up with? Does it make sense? And then the last thing I want to touch on the profit and loss is, while by time period is very convenient, depending on how your client uses the file, it may be worth it to, instead of showing your columns by a sub time frame, to show it by something like class. This particular sample file uses classes, but it doesn't look like they do it consistently. So that could be something you bring up to your client. Why do we have so much, for example, income in these different classes, but no expensive? Is that what they meant to do? Just things to think about. In QBO, you would also be able to do that, but this particular sample file doesn't have that turned on, but it would again be under this display, and you could come down and pull either class, location, whatever you're looking for. Anything before I move on to the balance sheet?
No, but you're so smart and so cool.
I agree.
Thank you, Brandon.
Every time Angie talks, I'm just like, man, Angie's good at this.
I've been doing it for a bit. All right, so we're jumping over to the balance sheet. And if profit and loss is mainly based on trends and how those things are being used, then I would say balance sheets are based on outside sources. And what I mean by that is, in a perfect world, I should be able to go down a balance sheet and link, or maybe not link, but I should be able to verify these different balances to some outside source. Some of the obvious ones are like your checking account. You should have a bank statement to go along with that. Your fixed assets. In theory, you should have some kind of receipt that ties to that transaction. But this is not a perfect world. And so we're going to do the best we can with what we have. And I'm going to talk a little bit about some of the, I'm going to say, more popular account types where you could find outside sources to, and some red flags in them. So I went through that rather quickly. I apologize. The reports, standard reports, and then balance sheet is a favorite or one you can search for. On desktop, it is going to be under reports, company and financial, and then balance sheet standard again. And one of the things I want to remind you, because I feel like this gets overlooked, is you can tie to different places within QuickBooks, but it must be for the same time frame. So by default, this particular sample file brings us to December 15th, 2029. So as I'm linking or verifying in outside sources, I want to make sure that I'm using December 15th, 2029, or whatever I'm looking at. So I'm just going to kind of start at the top. Checking accounts or bank accounts in general. You should have some way of tying to an outside source, most likely a bank statement. Is it monthly? Is your savings account quarterly? Whatever, doesn't matter, but those should be reconciled. Once you reconcile, if you have any uncleared transactions, you should know why. So let's talk about red flags in an uncleared transaction. If I have a direct deposit, if I have an ACH, if I have an EFT, something that is immediate or next day, something like that, and it is not cleared, that should be an immediate red flag for you. Now, I I'm going to show you how to get to a report in QuickBooks, actually desktop and QBO, that show how to get to those unreconciled transactions very easily. But do please note this is a sample file and they haven't done reconciliation. So what I would do, so I would go to my
client.
Yeah, there you go. So like a typical client. So I would go to my chart of accounts. In desktop, I would right click on my bank account and come down to Quick Report. Then I would customize and filter for anything that is not cleared. Now again, I'm going to click this and you're not going to see a change because they didn't reconcile anything. But this would be the listing of all the things that are uncleared. This works on checking accounts, credit card accounts, different loan accounts. Actually, almost anything you can reconcile on the balance sheet, you can run this particular type of report. In QBO, I actually think they did this better. So again, I'm going to go to my chart of accounts over here under transactions, going to pick whichever account I want to look at, and I'm going to go into the register. And then instead of running a report, they actually have this handy dandy filter that allows me to say, I want to look at everything that's not reconciled. Again, this isn't changing much because they haven't reconciled, but this is my listing. And if I go down here and just see anything that, remember, does it make sense? Is it reasonable? Is it being kept up with? I'm seeing direct deposits that aren't cleared. I need to know why. Is there a duplicate? There's a million reasons. We can't go into every reason. Great. I'm going to jump back over to my desktop balance sheet and go to the next section, if you will. So now we're into current assets, accounts receivable. If I'm looking at accounts receivable on my balance sheet as of 12/15/2029, I should be able to pull an accounts receivable summary or detail for that exact same date and get that number. So if this is 86,535, and I go to my reports, customer receivable, AR aging summary, 12/15, 86,535.40. Perfect. So they match. If they don't, I truly cannot get into the reasons why they wouldn't. There could be file corruption, there could be excess journal entries, there are things to do to fix that, but that's not what we're going over today. Once I'm on this AR summary, I need to look at some things. I need to look at old stuff. Okay, there doesn't happen to be any old things in this account, so yay, this client did quite well. But do I have negatives? Why do I have a negative? Is it because I'm missing an invoice? Does this customer, this Bonita, whatever it is, need a refund? Why hasn't that been taken care of? What's going on? Next thing you might look up from a cleanup perspective, if you will, is Karen D has $0. Why is she on this report? I double click on it. It's because she has a credit memo that hasn't been applied to an invoice. That's the kind of simple stuff that can help make a report look so much cleaner to get rid of that kind of stuff. So, and again, old is comparative. Like, what is old to you versus what is old to your client? These are things you need to discuss with your client. Right. Next thing down, we're going to jump into more current assets. So some of the things I want to talk about are, again, specific to different clients, so they may not all apply. But this particular client has inventory. Okay, well, I should be able to go and pull an inventory valuation summary as of 12/15/2029, and I should be able to tie. So, report, inventory valuation summary, 12/15/2029. Total, let me scroll down a little bit further. Oh my goodness, I picked the inventory aging summary. I'm so sorry. Hold please. Valuation summary, let's do that one. 12/15/2029. Scroll all the way to the bottom. 120/190.90. And then if I go back to my balance sheet, 120/190.90. Yay! Now, when you're on that inventory valuation summary, you can go nuts with it. Why do we have negatives? Why, are these calculated averages, do they make sense for the different pieces they are? These are conversations that we could go super in depth with. I'm just going to kind of leave you with, do they make sense? Do they appear reasonable? Are they being kept up with?
Yeah, and Angie, by
Back
the
on
way,
our,
just to add one comment to that, I think without getting into all the various reasons, I think one of the biggest reasons why those balance sheet accounts might not match those specific reports is journal entries, right? Because like a lot of the reports in QuickBooks are item based, or at least especially in desktop, they're item based reports.
Mhm.
So if and you can't use an item on a journal entry, you can only use accounts. So it's possible that the balance is affected by a journal entry, but since it's not using an item, it wouldn't show up the same way on maybe an item-based report. So just something to look for.
Oh, absolutely. And that could go on forever. Was it just miscoded items? Were your items not coded to the inventory account under the inventory assets account? I mean, we could really go into the weeds in this. So just trying to keep it high level for right this second, but you're absolutely right, Brad.
Yeah.
Next things. Again, all of these are going to be different. So for example, undeposited funds is a background function in QuickBooks that allows you to put all your payments in and then group them in deposits. So if I were going to my undeposited funds account, and remember how we were able to go to our chart of accounts and our checking account, well, I can go to my undeposited funds, right click, quick report, filter, or cleared, or excuse me, that are not cleared. These are my outstanding payments. So then the next question is, again, are they current? Have they just not been entered yet? Or is there something that needs to happen, like what's going on here? Actually, that's a different class. But what's going on? Does this seem reasonable? Some of these other pieces, like security deposits, work in progress, these are all going to be it's all going to be reliant on how your client uses them. So please just make sure they make sense, they're reasonable, they're being kept up with. Make sure that everything feels good. Fixed assets, I mentioned that you, in theory, should have purchase paperwork that ties to these. So if, for example, I have automobiles and trucks, and over time, it's increasing every single month, is there something that's miscoded there? If I'm in office equipment and I'm seeing $20 charges every month, are those actually office supplies that are being miscoded? It's just truly dependent upon what's happening in the background. Now, earlier I mentioned that most of your QuickBooks accounts in your profit and loss and your balance sheet have natural positive balances. And that is true with a few exceptions. Accumulated depreciation and accumulated amortization, which is not on this file, are the perfect examples. Those are accounts where either your client CPA, maybe you, has made entries expensing out these fixed assets over their useful life. Those by nature will be negative. So I would say my red flag would be if I see an accumulated depreciation or an accumulated amortization account and they're positive. That's a red flag. Let's jump down. If the client file has other assets, same thought process. Do these make sense? Do they appear reasonable? Are they being kept up with? Some of the things that you may see in, for example, a rental situation is things like security deposits. Those should tie to leases or some kind of documentation saying what those security deposits are. Is there a separate schedule where they're kept? I don't know. It's all about tying to that outside source to make sure that it matches. I am going to jump down to liabilities, and some of these have almost the exact same thought process behind assets. So I should be able to go through this pretty quickly. Accounts payable, it's the same thought process as accounts receivable. And I pull an accounts payable report as of 12/15/2029 and confirm that that total ties. Are they old? Are there zeros? Are there negatives? What's going on? Credit cards, financial institution, loans, things like that, you should have some kind of financial statement that you can tie to at a particular time. And then once you've done that, once you've reconciled, what are your uncleared items? Are they duplicates? Are they miscoded? What's happening? Some of the other pieces, especially if they use QuickBooks Payroll, QuickBooks Sales Tax, these are sample files, they are not set up that way. But if I have payroll taxes payable, I should be able to go look in my payroll center and I should go see those as liabilities that are due. Keep in mind time frames. This is as of December 15th. If you made the payment on December 16th, of course, it's not showing here. Just keep that kind of stuff in mind. Same with sales tax, though. Does their sales tax payable tie to the sales tax liability center? And then, and this is the worst section of them all, and I mean that lovingly, is the equity section. So this one's hard because everyone uses this different, everyone uses it the way they want, and it's not consistent. So your net income should tie to your net income on your profit and loss from the same period. That one's easy. Retained earnings in a perfect world would be all of the prior year's net incomes combined. So if this file was 2020 through 2029, then retained earnings should be the net income from 2020 to 2028 or whatever. But what happens is people make journal entries. They use retained earnings as kind of a dumping ground. So sometimes that is not accurate and there's not much you can do about it. So many people use it as a dumping ground. And then when you start looking at owner draws or contributions, a lot of times it's just an owner saying, oops, I accidentally put that personal charge on my company credit card. Can you just move it to owner's equity? Yep. Do they have the receipt for that? Probably not. So these are harder to tie to, but I still think it's important that you take a look at these and make sure, I'm going to use my same favorite three, do they make sense? Do they appear reasonable? And are they being kept up with? So good luck on those. And that's what I have for red flags in your profit and loss and balance sheet today.
Well, Angie, this is quite frankly, it's awesome. I loved what you shared, and it's all good stuff. Any questions from the group? Any conversation, discussions, chats, anything like that that anybody wants to chat about?
None here. Angie's continues to be amazing. Wow, wow,
wow. If you do, okay, Julie had a question. Any tips for cleaning up undeposited funds?
Oh, so many, and that could be an entire class upon itself. Depends on why they're there. So without going too crazy deep, if you have undeposited funds that are older, I might check the same time frame in my income accounts and see if maybe deposits were coded to, for example, sales income instead of being tied to those undeposited funds. That's just one example. Most people don't miscode to undeposited funds. That's a weird one. But I mean, that one could literally, we would go into it line by line and just see what's going on.
Yeah, but like as an example, let's say you had, $100,000 in undeposited funds, but in reality, you only had $10,000 in checks or deposits, or checks and credit card charges waiting to be deposited. So $90,000 is probably already in the bank account. Just it didn't get recorded correctly. If like you take what Angie is suggesting, you go find out like where it was miscoded, and most likely it's a deposit to income. So they've overstated their income by 90,000, most likely. The quote unquote easy fix for that is to go into the make deposit window, select all 90,000 of that stuff, say I want to deposit this, but then do a negative to that overstated income account so that the net deposit is zero, it's fixing income and getting those things out of undeposited funds. That would be just like as an example, one way to fix that if you knew that that was the problem.
Hey Brad, this is Julie.
Yep.
So the undeposited funds says there's nothing in the make deposit screen, but on the balance sheet, there's a balance.
I think we've seen that.
That's a deeper dive. Yeah.
Yeah, I think we've seen that before. It's pretty rare. And I'm trying to think what would even cause it. Julie, is that in desktop or is that QBO or
Oh
both?
no, it's QBO.
Okay.
Because desktop, you can reconcile that account. You can't reconcile that account in QBO.
Let me make let's make a note of that, and that might be something we can do a little research on and come back with some specific thoughts on.
Okay.
Because I have heard that problem before. I don't know if Angie, if you've seen that before yourself.
I have, and it's not clean and it's not happy, and I'm sorry.
Thanks.
So basically, phantom undeposited funds.
Yeah, but only on the balance sheet.
Yeah. So on balance sheet, but not in the make deposit window.
Correct.
Yeah.
I know one of my clients had journal entries in their undeposited funds, and they migrated from desktop to online, and it did not transition well. And to this day, that client has a single undeposited fund for like $40,000 because we cannot get rid of it out of the balance sheet.
Yeah, that is so weird. That is so weird. But yeah, I'll make a note.
That one was specifically that one was specifically a migration issue. So
yeah, so it's basically some form of data corruption, most likely, right? Probably.
I think this is probably from a migration, but it's been so many years. And it's a weird number, it's like $178,462.59. It's not a round number.
Right. So not something you can do a search for and see, oh, well, there's the transaction. Duh.
Correct.
Yeah.
It's just nagged me forever. And I just figured I'd ask.
Okay.
Yeah, and one of the things that desktop does that QBO doesn't is they have things like accounts for credit transfers, and they allow journal entries to the undeposited funds and things like that, and those don't exist in QBO. And so if you've done a migration, QBO just kind of throws up its hands and says, I don't know what to do.
Interesting. Hey, one other thing, again, if anybody else has any questions or comments, please go ahead and share them or ask out loud. But one of the things, Angie, that you did that you didn't say that you were doing, but I think it's kind of an interesting tip for folks if folks are not aware. Maybe if you can reshare your screen and go back to QuickBooks Desktop. One of the things that you were doing sort of unconsciously, I think, is you had that open Windows window that allowed you to switch back and forth between windows very, very quickly. Might not be completely obvious, like how you got to that and how you're using that, because that's a really cool shortcut for folks, I think.
So really quickly, because I know it's way after our 12 p.m. deadline, if I were to, for example, close all my windows and I come to view and look at my open window list, it brings up this little sidebar. Now, some people prefer to use, I believe it's this one. They prefer this icon bar, if you will, this left icon bar instead of the top, and it's by default down here. I prefer, just from a space standpoint, to do a view top icon bar and then view my open windows. But the theory is still the same. When I start opening things, it puts them on this left-hand side so that as I pull them open, I can go back and forth. Now, let me switch over to that other view just so you can see what it looks like. Yeah, so if I'm on that left view, here's how it looks. Same thing. but it's nice to be able to flip back and forth. In QBO, they don't actually have this, but in QBO, if you are interested in doing that, what you can do is duplicate your tab through your browser. It's quite literally, apologies, right-click duplicate, and then go to whatever you want on this tab. I'm absolutely making things up. And then you can flip back and forth. So same thing in both, just a little different way to get there.
Yeah, perfect. Awesome. Cool. Well, hey, I'm going to go ahead and hit stop the recording.